Hey guys, Doug the Retirement Guy here. We have a new series we're starting off with. It's called Monthly Paying Dividend Funds. 45 different funds we're going to be reviewing over the next 30 days. Hey, we got the review this month of the LTC Properties Incorporate. Is this good for a retirement account? LTC Reits showing a 6.29%. Now, this is one that I definitely have to tell you I do like, but you got to look at it as a whole package, not just yield results or stock returns. So we'll take a look at this one. LTC Properties is a real estate investment trust, but they're investing in senior housing and healthcare primarily through sale leasebacks, mortgage finance, joint ventures, construction finance. So they're doing a lot of different unique ways of being in the business. They operate in 25 different states. Their portfolio has 187 investments with its 50% senior housing and 50% skilled nursing properties. So what are they doing? As I've told you in this channel before, REITs can be so different. They can be in warehousing, they can be in homes, they can be in office buildings, they can be in retail outlets. This one I think is so unique that they are doing 50% in senior housing. As America gets older and older, we're going to need the senior housing, but they also have it in the nursing properties, which is another growing segment out there today. They're working with 28 different partners in doing what their program does. As I said, doing sale and leasebacks and doing the mortgage financing. So what is a REIT? So if you don't know what a REIT is, first off, it's a real estate investment trust. Simply put, it's a way that anyone can become an investor in a real estate property. Do I want to own a senior housing development in Seattle, Washington, or Washington, D.C.? No, I want to enjoy my retirement here in Florida, but this is a way that I can get into every one of those segments without have to be literally hands-on involved. The unique thing with REITs is always remember, distribution has to be 90% or better of the profits to the shareholders. Okay, so 90%, 90 cents of every dollar of profit has to go to the shareholders. Some do more, some keep it right at that minimum. But basically, so this is like getting a regular paycheck from having a real estate investment. The diversification, as I've said already, you don't have to have all your eggs in one basket. This is not like buying houses and having your money sit into it. You can buy REITs that are for warehouses. You can buy REITs for offices. You can buy one here for senior homes. The performance of most REITs across the board will outdo the S&P 500 and other corporate bonds if you buy accordingly and you buy right. So you have to do your analysis. You have to look at what's going on. So why LTC? Well, again, it's that dividend, 6.29% dividend, solid on a regular basis. But here's the one that got me. The growth of the stock value is 6.87 over 1 year, 46% over 5 years. So it tells me that this thing is just slowly finding traction, slowly growing as they continue to add more and more properties into their portfolio. And of course, because this is one of those monthly dividends paying stocks, that's what we're reviewing. We like the regular cash flow. Other people like the reinvestment, the potential. I like getting that paycheck every month, pay my bills, do what I want to do, and then go live. So LTC 1 year out, and we do this at all times. And I look at the bar chart first, see what's going on, and then I look at the numbers and they almost match each other. If you go back to the March madness that we had, this one really didn't get affected by it. It was smooth, and we're seeing a lot of our REITs. Nothing happened in March. But in April, when we did the tariff drop, that's when we started seeing our problems. That's when we started seeing some issues dropping off. But here's the thing that gets me the most. Look at the exit out of it. This stock has basically rocketed itself from the bottom and out. It said, we are a properly funded company. We know what we're doing. It's not going to affect us. And shareholders and so on all agreed. So 1 month out, these guys are up 8%. 6 months, they're down 6%. But year to date, so January through April, they're up 6.49%. 1 year, 7.92%. And 5 year, we have it at 2.72 for growth. We look at that 5 year out, same thing. We see the peaks, the valleys, but this thing continuously has its growth pattern to go through. Now, the one thing I don't like about LTC is the dividend. The dividend is stayed steady since 2017. So it's kind of a double-edged sword. I love that it stayed steady. I can count on that money every single month rolling in, boom, boom, boom. But I've seen no growth over 5, 6, 7 years. I would like to see some growth coming back out of it. So is the profitable coming from it to get that 90%, or are they pouring money back into to try to develop and grow their company? And again, you can see since 2018, we have not seen any growth in this LTC. So we invested $10,000 into this a year ago, and we bought it $34.50. We were able to buy 289 shares. We let it sit. It's grown up to $36.24. So we've had a 5% growth in our fund. Very pleased with that. Adding in the 6.61% dividend that we got from it, and you can see it's 19 cents. We expect to get that again in 2025 and all of 26. We expect to get 19 cents a month per share. So we basically, total across is 11.65%, including the dividend. Now, I will say this straight out, we do use that dividend to live on. So we have thrown that into our pot. So realistically, we're at 5% growth in our stock and 6% going to us to live on. So we take a look at LTC's big fall, which basically happened back in October. The company reorganized, they sold a couple of properties, they did some other things that happened in the company to give us the drop off. But again, you see that sweep moving right back up and out of action. So the average price of $36 is a 52-week average number. Currently, they're at $36.24. So some people will probably ask, is it too late to get involved? Is this too late to be invested into it? This is one of those stocks that I think you buy on a regular basis. Don't pull all your money in at one time. You just buy on a continuous basis and wait for that big drop off, because you know if the drop comes, you're going to be able to get back, and it'll come back fairly quickly. So is this good for a retirement account? I say definitely. You have a steady cash flow. You have a nice solid growth. The only kicker I have to it is really that the price of the stock is already above the 52-week average, and I like to buy something on a sale, something on a discount. But overall, it's a solid piece to go with. So your 6.1% dividend is very good. Like I said, continuously solid. Don't worry about it. 5% gain. I expect to see that on a fairly regular basis, if not more, for a total return of $11.65. Guys, this is Doug, the retirement guy. And if you like what we're doing, give us that thumbs up. Click on that thing. Just tell us we're doing good. We have over 46, 47 different videos coming out on monthly paying dividends. Don't miss a single one of them. Join us, join the party, hit that subscribe button, and also don't be afraid, leave a comment. Good, bad, or ugly, leave a comment, let us know what you think. Everything helps the channel grow, and we'll see you next time.